So thank you very much for being there to this evening for an amazing meetup about the ETF Dynamic on Bitcoin and maybe the future Ethereum ETF. And we're going to explore tonight how this can have an impact on the crypto market, but not only. We will also explore what will be the impact on the financial market as a whole. So I have the pleasure to have a very interesting list of people here, starting with Alexandre Stachtchenko, Théo Mogenet, Laetitia Zito, and Merlin Egalite that are going to present themselves just after that. On my side, I'm Benoît Koulisha. I'm the co-founder of Web3 Talent Fair and Good Hive. And we are organizing this event tonight with, in collaboration with Web3 Talent Fair and Curious Society. And Laetitia, would you like to introduce yourself?
Sure, thank you for inviting me. Hello, everyone. So I'm Laetitia Zito. Today, I'm a general manager of Paynium, which is a crypto exchange company. A little bit about my background. Initially, I started with studies in chemistry, so nothing to do with crypto. Then I changed to corporate finance, and I joined Paynium in 2017 as a CFO, and it's been 2 years now that I'm a general manager. And Paynium is a crypto exchange company in France since 2011. So it's been a while in the crypto space. Initially, it was an exchange for Bitcoin and Euro only, and now we have a lot of other services, more cryptos, also OTC desk services for companies, a wide range of services.
Merlin.
Hi everyone. So I'm Merlin, one of the co-founder of MorphoLabs. So at Morpho, our goal is to rebuild financial infra as public good. We started during our studies building a Morpho optimizers, so starting building a lending protocol. Now there's 2 billion of deposited assets on those protocols. And we're still continuing. We recently launched a new version, which is fully permissionless, called MorphoBlue, 1 or 2 months ago, and there's like 300 mil on that protocol. And yeah, we're 4 co-founders, and the team is like mostly French people in Paris. So yeah, maybe.
Yeah, Theo.
Hi everyone, thank you for the invite. I'm Théo Mogenet. I'm basically a Bitcoin consultant. I'm a business school graduate and I've been trained as a data scientist. Then upon discovering Bitcoin, I decided to dedicate myself to help corporations and individuals on boards, explaining the best practice in terms of self-custody, coin management and stuff like that. And I've also taught in business school, mostly economics and finance, specializing on Austrian economics. Yeah, that's all.
And hi everyone, I'm Alexandre Stachtchenko. I'm a French and Canadian entrepreneur, author, and speaker on Bitcoin and Web3. I founded a company in 2015, which was called Blockchain Partner, and I sold it to KPMG 2021, where I became director for blockchain and crypto assets management business unit. And since 2023, I'm back to being an independent consultant and expert and speaker on Bitcoin and Web3.
Okay, sounds a very good set of personalities to discuss this today's issue. My first question, it would be to all of you. What in your mind define what is a Bitcoin and how different it is from a traditional asset?
Well, the simplest explanation was given by Satoshi Nakamoto in 2008, which is a peer-to-peer electronic cash system, which means that it's trying to be an alternative to the fiat currency system, both in terms of the fiat currency, so the monetary system. So the alternative proposition of Bitcoin is to be the limited currency in its emission, in its issuance, sorry, to work without central banks. So it's an alternative proposition basically, but it's also a payment system integrated. So it's the same thing. It's both currency and a payment system. And the payment system part is trying to replicate what cash does in the physical form, so peer-to-peer exchanges, anonymous and so on, but do it in the digital world. So yeah, it's trying to be an alternative. It's been here for 15 years now. And of course, you perceive the value of Bitcoin the more you're exposed to the problem that it's trying to solve. So usually I say that in France, for example, we have a kind of a cultural exception, like we figure everything in centralized ways. So of course, we are further from understanding Bitcoin and adopting Bitcoin than other countries and people. For example, if your financial system is corrupt and has gone bankrupt, or your currency has collapsed, then you perceive the value proposition better than if you're in France with a bank account and a stable system.
So the other crypto assets are not really an asset class as a whole, because the only thing they share in common is that they are crypto basically, but they are so different, like from an art NFT to a stable coin and Bitcoin. These are so different types of assets that most of them are probably in the future going to be another way of representing an underlying asset. For example, if you have an NFT of a real estate, well, then you have rights to a real estate, but the real estate's still the same. But Bitcoin is very, very different in its proposition. It didn't exist before, and now it's been released 15 years ago, and we'll see where it goes.
Yeah, Theo, how do you find it different than traditional assets, and do you find it better, or do you find it? What are the key differences to you? And yeah,
it has been created purposefully as different from the legacy system. As Alexandre explained, basically the project was separating money from the state. So from the onset, the idea was to offer a different paradigm. And in that sense, the way you can think about it is that like we always had bearer assets, so stuff you can hold in your hands, like a bar of gold, a bill, stuff like that. But as the economy expanded through space with globalization, first in the Renaissance and then in the following centuries, exchanges took place on a bigger scope, and it was too costly and too difficult to settle transaction in physical bearer assets. And historically speaking, that's how we developed a more centralized credit system in order to facilitate fast-paced, wide-range transaction. And the problem with that is that it concentrates power in the hands of intermediaries, be it bankers, governments, and stuff like that, that can be pressured, that can issue credits unnoticed, and stuff like that. And so, for the first time with the invention of Bitcoin, we have the best of both worlds, in the sense that it's a bearer asset, but it can also travel through telecommunication channels, so you can settle value with anyone on the planet at any moment in time, and whatever is your nationality, your beliefs, your gender, your sex, it doesn't matter, because the protocol is agnostic to all of this. So it's so difficult to compare it to traditional asset class, because they have been developed on top of the legacy financial system. So they inherited its properties, like you always need an intermediary. You cannot own anything directly. Even if you own a house, for example, you only have a title saying that if someone basically tried to use it instead of you, you can call the government to enforce your property rights. But there is this intermediary upon which you rely to enforce your property rights. And so in that sense, it's a totally novel thing, and it's too difficult to compare to traditional asset classes.
Yes, I agree with everything that was said already. For me, Bitcoin is also, decentralized and permissionless. So its validation of the transactions are decentralized. It's not done by a global entity. So you have the miners to do that. And permissionless means that everybody can come into the system and add a value to the Bitcoin. You can, if you are a programmer, you can bring your knowledge to it, and you can develop applications on top of a Bitcoin. So this is new compared to the traditional financial system. It is trustless. So what was said before, you can transact peer-to-peer. You don't need a third party to validate your transactions. You can go international within a second. You can transact on the other side of the planet directly with the person. Today, you cannot do that with the traditional financial system. You have to go with SWIFT transfer that takes days, weeks, sometimes months, depending on the country. And with Bitcoin, you can do it in less than 10 minutes. So you avoid a lot of risk for the parties transacting. You have relativity anonymous transactions. So everything is available on the blockchain, but it's not written that I am doing the transactions. You have to have other systems to go to back to the person initiating the transactions. And yes, so it's very different and complementary to the traditional financial system, but it's a new class of assets.
Hard to add something relevant after after you. Yeah, I don't know. It's like maybe what I can add is like I think Bitcoin is like going back to maybe the internet route where people were hacking and like building open source protocols, and like and people could be were able to build on top, as you said, and you didn't have like yet centralized entities like GAFAM that were here with like lots of power, bringing some efficiency, like we can retrieve in the current financial system where, I mean, in like in our countries at least, where it's like super easy, you have a nice app, it brings a nice UX for users, but the the disadvantage of that is like once you have problems, then you understand the value of like decentralized, permissionless, resilient systems. And I think we in like Occidental countries we may have like forgotten that because we don't have like in general problems with our financial systems, or I mean we have banks working approximately well, but once we have a problem, then we realize that it's broken, that we have corruption, etc., and we tend to forget about that. And Bitcoin was like let's rebuild the financial system in a better way, and maybe coming back to what the internet was supposed to can be a free open space where people can build things and that are accessible by everyone.
So yeah, Bitcoin is something very different and very new in the financial planet. To what I understand about what you say and why you're here as well, is you believe it's better than most of the other assets. Since the last 3 months, we have seen quite a big growth in the Bitcoin price. We will explore later on the reason for that, but do you believe at this stage that we're into a bull run?
Not financial advice. Maybe yes. Like I think everyone knows that you have kind of cycle in the crypto space, like depending on when you enter, like maybe you've seen like different cycles. I think with like the past few years, I've been on the DeFi space, like very hard for companies in the space. So it was very long and very hard because like when it's a bear market, obviously you have less money injected in companies, in startups, etc. So it's quite hard if you're not profitable yet. It's very hard to find investment funds, users, etc. Everything is hard, and for the past few months, we have noticed like a real inflow of new users, new funds, funding companies, startups, and also scams. And because like when you have a bull market, you have like more users, but also more scams and like more incidents where people are losing money. So yeah, we might be in the start of a bull market.
I can imagine you see that in your own growth. Can you give a few numbers about what's happening on MorphoLabs?
So the cool thing at MorphoLabs is like we've noticed like a steady growth even in the bear market. So it was like one of the fastest growth in the bear market within DeFi protocols. So this markets like just like if we take the total value locked, so the deposits on your protocols, if it's denominated in US dollar and you're exposed to ETH, for instance, and like the price of ETH double, then of course your total value locked double as well. So, but is it like a great metric to track? Maybe you should just track like the number of deposit, like the number of tokens, number of users, etc., to have like a more accurate. And we've noticed like some growth on that aspect, but not sure if it's really related, especially by the bull market or just because we have been working for 2 or 3 years, and that you have kind of Lindy and network effect that is playing here. But
yeah, Laetitia, you're working for Paynium, the most ancient exchange in the world now, in the world of Bitcoin. So you must have some figures
Yes.
Related to the growth of Bitcoin and how. If you have some comparison in between what's happening now compared to the previous bull run, and if you believe we're in that state of market now.
It's been 2.5 exciting months with a lot of new customers, more volume, like times 3 or 4 in the last 2 months. I don't think we are in a bull run yet. Compared to 2021, it's not the same, and not just for Paynium, but generally for other exchanges. So I think it's a pre-movement, very exciting in terms of price, but I don't think it's yet a bull run. So the next few months will tell us. I think there was a lot of excitement due to the ETFs, and they had a lot of volume. Maybe it's a new class of customers that were able to access Bitcoins through those ETFs, but I don't think that for us we are still in a bull run.
Okay, maybe I don't know if you want to answer this question or if I go to the next question with you. More about the impact of ETF on the traditional finance for maybe Theo.
So maybe let me just explain briefly what an ETF is. Basically, it's just a vehicle to facilitate investments from different range of investors. So it dates from the 90s, invented by John Bogle, the founder of Vanguard. And basically, what motivated this kind of products is the idea that by buying the whole markets, you will outperform most fund managers that are trying to pick the stocks that will perform best. And since their inception, they have been really popular vehicles, first because they allowed cheap diversification, and then because it allowed asset managers to construct tons of different ETFs based on what basically investors wanted. Now you can find any type of subgroup of ETF if you want to invest in ESG, in only countries that respect human rights, and so on. And so now they are proliferating more because they make stuff easier for most investors. And in some instances, they are even bigger than the markets they are based on. And so at the beginning of January, we witnessed the launch of 11 ETFs in the US. They are spot ETFs, meaning that the asset managers have to hold the underlying Bitcoin to back the fund, which is important in the context of Bitcoin price, because it means that flows within the ETF are mirrored on the spot markets with some time lag, but let's not get into the weeds here. And it's an important development, of course, because it means that whilst before you will need to understand a little bit what you are doing when invested in Bitcoin, most of the time, either you have to trust an exchange, and we have seen in the past years why this can be a bad idea. And the alternative was to learn how to use a hardware wallet and assume your self-custody, which can be worrisome for many people. And so with the ETF, we kind of have an omnibus vehicle that people can use to easily get in or get out a Bitcoin exposure. So that's the nice part. And it also puts Bitcoin on the map, because behind those ETF are some of the biggest firms in the world in terms of lobbying power. So of course, having them on board and trying to sell Bitcoin to everyone is really nice, because the narratives that we have been pushing for years now are becoming mainstream. With the caveat that, going back to what we said in the introduction, this is not Bitcoin. It's like, as you would notice, like we all describe Bitcoin as this groundbreaking technology to hold exchange value and stuff like that. It's not just a chart. And so owning shares in a fund, it's kind of like owning a 21st technology through a 20th century vehicle. So it's kind of backwards, but yeah, it has its upside for the whole market.
Do you have an idea about the amount that went through those ETF? ETF, sorry.
So as of now, it represents something like 60 billion under management, with the caveat that a fund called GBTC, which was a trust, a different structure than an ETF, less efficient, already existed and was transformed as an ETF when the 10 others were launched, and it already boasted something like 30 billion in assets. So it represents something like $30 billion inflows in about a little bit less than 3 months, which, to give a comparison, means that it's the biggest ETF launch in history. As of now, both biggest ETFs, IBITS and FBTC, have been up for, in terms of inflow, for 50 days, which is unheard of in the ETF space. And in terms of volume, there are something like 4th and 6th within the US in terms of volume traded, just below like the biggest ETF in the world, tracking the NASDAQ and the S&P 500. So yeah, it's a huge launch, even from TradFi standards. And so it's in that sense, it's a big win.
That's very impressive. Do you believe that in the coming months, coming years, those ETF will grow even more? Because for now, if we look at the percentage of Bitcoin value, it's only like less than around 5% or?
Yeah, but I mean, it's already huge. Like before that, the biggest concentration of coins we had was, yeah, Grayscale, but it's the same kind of players, or MicroStrategy, so a Nasdaq-listed corporation whose CEO has been really committed to accumulate as much Bitcoin as he can by floating fiat debt paper on the market to get dollars. But MicroStrategy is like something like 200,000 Bitcoin, so only 1% of the available supply. So even if it's only 4 or 5%, it's huge, both in terms of market cap, overall shares of the floats, and even you have to consider also that most coins are not circulating. So yeah, it's only 4-5%, but you also have to consider that something like only 18% of the coins moved over the last year. So it's a huge chunk of the Bitcoin that are really exchanged out there.
Alexandre, do you have something to add on top of this about the ETF, their impact on the financial market as a whole? So we've seen that there's a lot of pension funds, this kind of traditional finance that were never expected to join the Bitcoin, but now they're joining. What do you think is the future of it?
I think in terms of fundamentals, it doesn't change anything from the Bitcoin perspective. Like, it's still working, still block every 10 minutes, everything's still working. But from the narrative perspective, it changed much because it allowed so many players from the traditional finance to come into the system, and without having to go through the hurdles of owning your own Bitcoin, without having to go through the hurdles of being name and shame, like you own something that's financing terrorism and so on. So it's kind of a label that was put on Bitcoin, like now it's safe even if you are in traditional finance. And so it started a race, basically, where traditional finance is coming into the field, and the narrative is shifted. So that means that when you talk to asset managers now, you don't have the same conversation that you were having 3 or 4 years ago. When 3 or 4 years ago you were like, yeah, you should consider Bitcoin, they were like, oh, well, that's very risky, and I don't know if we should, like, I don't know if we have the mandate from our clients to buy that. Maybe we'll see in a few years. And now it's like, when you look at the allocation of funds, some of them have started to actually have investment thesis about Bitcoin and say, well, it's kind of a store of value, so maybe we should not do 60% equity and 40% bonds. Maybe we should do 60-39-1 or 60-35-5. And that means that if it goes into the narrative, that means that the buying pressure that we've been seeing for the past month, it's not going to go away. Because until they reach what they call their investment thesis, but they're going to buy. And it's kind of a self-fulfilling prophecy, because as a store of value, well, people in the Bitcoin world, they have known for quite a long time that Bitcoin has the characteristics that are needed to become a store of value, but then it's not sufficient. If you want to be a store of value, you need social recognition. And so social recognition is coming in big chunks from the traditional financial world. So if they label it as something that you can invest in without being a terrorist or whatever, that means that it's starting to actually be recognized as a store of value, and then it's self-fulfilling. If it's a store of value, then more people believe it's a store of value, and it goes and goes and goes. And so that's what we could see as a trend. So I really don't like positioning myself in terms of, is it a bull run or a bear market, or like, it's not really a question that I wonder every day. But I wonder about the fundamentals and the trend. And yeah, all the signals for the trend are quite positive.
So, so that's very interesting. We have seen we have been talking about the Bitcoin, but the crypto planet is already starting to talk about the Ethereum ETF coming in. I know it's now on the desk of the regulators, especially in America. How do you see it coming? Do you think the impact will be different? And yeah.
Yeah, so I doubt it will come as fast as Bitcoin wants, because one of the reasons the SEC had to give up and basically say, okay, you can do the ETF. Well, let's make a parenthesis here, but the SEC has been actually nearly found guilty by law to actually have delayed the ETF by way too much, abusing administrative procedures to not to allow this product to come on the market. But one of the reasons they finally had to is that there is kind of a consensus, at least in the US, that among the crypto space, which, as I said in the beginning, I don't think it's a space that's very coherent, but let's go past that. Bitcoin is seen as a commodity. It doesn't give profit to anyone. There's no dividend. There is no voting right. There is, like, most people agree on the fact that it's a commodity. And you don't have the same consensus about any other crypto. So it becomes much more complicated if you want to issue an ETF on a security, for example. I'm not saying it's a security, but there's not the consensus that would allow them to say, for example, you can do an ETF on something where there's staking and you can gain inflows of money through staking Ether. So I don't think it's going to come in like next month or in May. Probably the discussion is going to last longer. And even if it comes, then as I said, what's important is the narrative. Because if you have an Ethereum ETF available, then who are the customers and what are they buying? If they're buying something that's seen as correlated to a risky tech stock, then probably the inflow is going to be smaller than all the pension funds allocating 1% into something they perceive as a store of value. Doesn't mean that it's not going to have an impact if it comes, but I don't think that the narrative is so strong than it has been on Bitcoin in traditional finance, because traditional finance can actually buy something with a narrative that is store value, but if they want to go into Ethereum, they will have to convince their own customers that actually it's something that's not so risky, whereas it's still for the moment something perceived as a risky asset for the development of decentralized finance and many other stuff, but it's still perceived as risky, more risky than Bitcoin at least.
Anybody want to say something about this? The Ethereum, the possibility of an Ethereum ETF, and how different it would be from the Bitcoin ETF.
So on our case, it's like I agree with you on the narrative side. It's like on the DeFi space, I'd say like one of the blockers or maybe the regulation mostly, where it's a bit blurry what protocol project teams can do, and this is a huge hurdle also for the traditional finance space. If they want to create bridge with the DeFi space, they cannot, or it's like too blurry for them and too risky. And I think it's like in the case where the if ETF is approved, then it's kind of the strong signal that Ethereum is accepted, and it's like it's less risky than it was considered before. And I think it will push some like regulation clarification, and also push some actors that were not willing to interact with DeFi protocols to interact with them, because the DeFi space is it's kind of a bubble. Bitcoin is also like of course like the goal is like you want to pay as much as possible using like at the end of the day a blockchain, something that is like decentralized, permissionless, etc. but if nobody is using it because it's like too uncertain, too complex, too whatever, I think we are failing at, and so we really need like some clarification on that side, and like to just widespread and like broaden that technology to everyone, and not everyone is like will do self custody. Obviously, it's like that's why we are seeing a huge inflow into the Bitcoin ETFs. Like not everyone is like willing to care about their keys, etc. It's a pity, but at the same time, like everyone has their own priority, and so we need to open to a broader spectrum of like persona and people the ability and the capacity to interact with blockchains at the end of the day. So yeah, we'll see how it goes, but I think it will at least help on that side.
Yeah, or Laetitia or Theo, but I know that Ethereum, there's less liquidity. I mean, there's less token available since there's a lot of stakers on it on Ethereum. People who are passionate about the Ether who wouldn't sell it easily, which is not the case on
and
Bitcoin.
It's a proof of stake.
Yeah.
It's a proof of stake
Yeah.
blockchain.
Exactly, and the consensus mechanism rely on people staking, and there is a retribution for it. So I believe that the liquidity on this market, the available Ethereum is to the ETF would be less than the available Bitcoin for the ETF Bitcoin.
I don't know. I'm sure there will be an ETF for Ethereum, but for me it's a little strange because Bitcoin is really recognized as a store value, and ETFs, you invest in a fund, you will never get the underlying assets for yourself. So you will never be able to profit from the Bitcoin part for transacting. You will only get the store value. For Ethereum, same thing. You will never get the Ethereum to make transactions. And for me, Ethereum blockchain is very interesting for transactions, not to store value, because you have all the smart contract possibilities. It's for me, it's very interesting as a transacting tool, but not so much as a store value. So for me, ETFs on Ethereum, I'm sure they will exist, but it doesn't have the same interest as the Bitcoin ETF, on my opinion.
Yeah, I totally agree with what was just said. Maybe a kind of a controversial take. To me, we are talking about Ethereum ETF now because there is a lack of narratives within the Ethereum space. Since inception, it has been sold as a world computer, some decentralized system anyone could interact with anywhere in the world to basically exchange value programmatically. From now, we understand that it's just not doable. It cannot scale on layer one until that point. That sparked competition last cycle with other chain with virtual machines, so having the same programmability, trying to seize market share from Ethereum. And some of them have been way more centralized than Ethereum, and that made those way more efficient in terms of transaction time, transaction fees, and stuff like that. And so now, in some sense, Ethereum is stuck between a rock and a hard place, because the narrative has always been like Bitcoin is this old thing. You can do anything with it. You can do DeFi. You can do all that stuff. Okay. Yeah, and then now we can do all of that stuff on other chain more efficiently in some sense. Yeah, you don't have that much censorship resistance and decentralization, but it's a specter, and for many use cases that's enough. And so it's neither a store of value, which would make sense in the context of ETFs, accruing big inflows from large financial institutions, stuff like that. But if it's only like a tool for programmatic finance, then yeah, I totally agree with Laetitia. What's the point of owning it through an ETF? Because you lose all the value there is here. And on top of that, you have the competition of other chain, meaning that it's difficult for Ethereum to be branded now as this world computer when you have that many competitors achieving exactly the same results and arguably more efficiently. So I honestly think it's more like a kind of trying to pump the stuff through narratives, but I don't really see the case for like large financial institution, maybe retail. It will like help a lot of like retail investors to get exposure on Ethereum more easily than downloading a MetaMask or something like that. But I don't see like large financial institution committing for large allocation because either they would do it through another channel and benefiting from staking and stuff like that, because you also have to know that most ETF application for Ethereum right now, what they offer is that we'll hold the coins and we want to be able to stake it and get the yield for ourselves. So even if the regulator hasn't agreed on this, but if it agrees, it means that yeah, you lose a lot of the value there just by being in an ETF instead of owning the underlying. So yeah, lots of question marks for approval, and yeah, it's even less interesting to hold Ethereum through an ETF than Bitcoin, I would argue.
Yeah, you have been talking about the adoption of cryptocurrencies by the global financial system through your different interaction. I was recently in US and I've seen that the institutions are like very bullish about the crypto ecosystem. There's more and more hires there in the bank. Like Fidelity or like JP Morgan and many others. Do you believe that they're going to interact with directly on the DeFi market sooner or later, or how do you see that coming?
I'm sure they will. I've actually written a paper last year explaining how I think they would. So one single idea I will develop is that for now, those are really primitive markets in the sense that many market functions that are in the background that as user we don't witness that much, like market making, hedging, trying to arbitrage spreads between markets, seizing spread opportunities and stuff like that. It's still the Stone Age in the crypto markets, and it's how those big institutions want to enter, because for them it's like really low risk trade where they can net a lot of margins. But for that, you have to have enough market depth and liquidity, which can also be helped with the launch of ETFs and with the growing adoption, making those coins larger in terms of market size. And so I think they will, but I would imagine more like as they have always been in markets as market makers. Like, for example, you can imagine the DeFi space, like big banks entering just to provide liquidity in some instances to capture some market inefficiencies, some spreads that is out there because nobody wants to allocate, I don't know, $500 million to lock in this protocol just to then hedge their position on a centralized exchange. So I could imagine they doing that, but on specific DeFi use cases, I don't know.
Merlin, do you want to add something? I heard that it was a few months ago, Forge did some transaction on Aave on lending protocol. Just for the record, they were very proud to do it, and we were all happy that they did it. Do you see something coming in this way?
As Theo says, like very the Stone Age, I guess, I think they are doing baby steps in the space, like just exploring things, etc. One of the entry points is more about like real-world asset, like how do we tokenize assets, bonds, etc. How do we put them on chain? How can we put that on the lending protocol and borrow some cash, etc. So I think the real-world asset tokenization is like a huge entry point for them, but we are not there yet. And like in the DeFi space, like I think the innovation pace is quite fast, but their timeline is like years. Like maybe 5 years, etc., even more, and so I expect them to be like very like long to like having like very huge strategies that are deployed on chain. I think the innovation will come more from centralized exchange like Coinbase, Kraken, or those players that are both in the crypto space and also that are regulated and that can like now issue and have like a strong force, like a huge of liquidity, etc., that they can use. So they have like I think the innovation on that side like will be mostly on their side. Like for instance, Coinbase has like deployed a layer 2 on top of Ethereum, and I believe that they will use that as to launch their own project and own reward asset tokenized product, etc.
Okay, so we're going to do the last round of the table before the question and answer. And my question for every one of you is, how do you get ready in your own field of business, or maybe personally, for the impact of the Bitcoin ETF coming in, the potential bull market that is starting? How do you get ready in terms of process, in terms of investment?
Good question. So on our side, like our concern are more about security in the space, where because everything is open source, like you don't have the possibility to have a flow in your code. So I think I'd say it's like one of the major concern. Then you have like also regulation, so make sure that you can operate like for instance on our side, like the association is in France. It's not an offshore thing, etc. So we want to make sure that we can still continue innovating without any problem. I think so. We'll closely follow like what regulation do after like this ETF release. And yeah, but after that, like on us, it's just like scaling. Like, how do you scale and give access to as most as users as possible in the DeFi space in the world, to just like welcome all those new users. And how do you improve the UX? Because I think this is like one of the critical point where we are lacking a real like good user experience in the DeFi space. It's like if you're not a nerd or you don't have like a lot of money, you really don't want to use DeFi protocols, because like you might be scammed. You can lose your keys. It's very complex. You don't understand everything. So we have a lot of work to just onboard people. And I think this is on our side, like to provide like new tools, better wallets that are closer to the experience that centralized entities can offer.
For us at Paymium, we've been in the crypto space for 13 years, and we share this value of growing for Bitcoin. It was obvious for us, so we're kind of ready for what's happening right now. Obviously, we have challenges. The shift of population coming on the exchange was at the beginning super experienced people knowing really the technology, and today we have the person that doesn't know how it works, the underlying technology, they don't care actually. So it's really not the same people we are addressing. And we have obviously regulation challenges, but yes, we are ready. We've been ready like forever, so it's exciting times.
So on my end, it mostly consists in understanding how I will convince my client not to buy the ETF. So it's underscoring the difference between like Bitcoin and the ETF. Like for most people right now is just like a financial bets, but I insist on that. Like wrapping Bitcoin in ETF is like marveling so much as a combustion engine that you would pirate through town with one in your horse and carriage. Like it doesn't make any sense. It's just like you put the best technology for value transfer and you put it in like 1 century old technology for asset transfer. And so I think for many people that have been hard on self-custody like me in Bitcoin, the new challenge is more like trying to explain people why it's important to hold your own keys, why it's liberating to have control over your money, and why like prices going up is not everything, and how you should start dip your toe in the water, because knowing how to use the technology also has its advantages, whether for your financial freedom, whether for your career, whether for like, I mean, if you are 25 right now, it's something that you will benefit all your life if you learn how to use it, even in simple steps, even if you are a non-technical people. I'm not by training. And so, yeah, most of what I do right now is explaining the difference, as we have done today, between Bitcoin and this kind of ersatz of Bitcoin that we put out for the boomers to play with.
Yeah, well, very shortly on my end, most of what I do is education, basically. So speaking, conferences, and trainings, and expertise, and consulting. So what I'm trying to do is that I know that people come and get an interest into Bitcoin mostly when Bitcoin price rises, and that's where I come in and try to tell them that, you know, the price is just, it's not really interesting. In fact, you should, like, great, you came in because you saw the price rising, but now there is so much more to discover, the fundamentals, owning your keys, what it means for, well, I don't know, democracy even, law, environment, geopolitical stakes. And so that's what I'm trying to do. And I know that as I said, when the price is rising, there's many people that want to be inside the space, but they come through the price door. And I'm trying to take as many people out of it and say, you are not a professional trader, you're gonna get wrecked. Just don't go away because you got scammed or whatever. There are some things that are interesting in the underlying thing, the fundamentals. So yeah, that's what I'm trying to do as much as possible.
Okay, sounds very good advice to do things that you understand and to try things, to go directly to the Bitcoin, because this is, I mean, Bitcoin or crypto natively and not through an ETF. Even though there's a lot of people who I don't think we have any chance to convert them, like especially for the pension fund. So that's a way to be exposed to it. So thank you very much for all these very interesting talks. I will turn to the assembly and to see if anyone has a question.
Hello, I'm a former alumni of the school. What advice would you give to a person to make sure that their access keys to their portfolio is safe and they won't be lost in case the person is still alive and in case the investor is dead? Is there any platform or any platform that centralizes the information of the portfolios of a person when they are dead, like we have with life insurance, or is it something that is expected to come in the future? Because I heard a lot of person who lose their access keys, and I heard that it was something like 25% of the owners of Bitcoins. So it's a lot.
The figure you mentioned, like all these people losing their keys, you also have to understand that it was in the early days of Bitcoin, it was really hard to store, and most people didn't have any clue of the value that it would have in the future. Like at the beginning, in 2009, 2010, 2011, 12, people were mining it from their laptop. Most of them, they forget it, they lost their hard drive, but because they thought it was worthless, like maybe a couple of dollars or stuff like that. And only like 5, 7, 10 years after, they woke up, oh my God, I had like 1,000 Bitcoins here. And so they're like, oh yeah, I lost million. But nowadays, the same individuals would take more precaution because it's way more value. And so you have solutions for what you described, so basically inheritance, specifically for a practical implementation. You can contact Montaigne Conseil here in France. They are specializing. It's Conseil de gestion de patrimoine. They are specializing in helping individuals handle their own keys, their custodies, and also tackle efficiently the question of inheritance. How do I set up my cold storage such that even if I have an accident, if something were to happen to me, my heirs would have access to the keys. And so another element of response would be like, what we can do technically on Bitcoin is that have some schemes whereby, for example, you will have multiple keys that will grant you access to a specific wallet. And one of those keys is off. And so if some condition is met, over time, this key will be activated automatically. So, for example, the condition could be like the master key, the first key, the one that is always live. It hasn't signed in over a year, and then it activates the second key. And that way, you can imagine a setup where, for example, you explain to your heirs, maybe your children, that, okay, I bought Bitcoin, guys, here is how it works. You give them a key. They don't need to use it every day. They don't need to understand much about it. Maybe they have someone they can turn to for technicalities. And then if you were to pass out or something were to happen to you after 6 months, a year, you can program that. Their key will be directly activated, even if you lost yours, even if they don't know where you hide yours and stuff like that. So you don't necessarily need an intermediary right now to do that, but if you want to set up inheritance properly, you still have legal declarations to do, you still have some schemes to adhere to according to French law and foreign law, and so you also have to figure out all the steps going through a notary and stuff like that.
You also have another solution that is global as well, that is called Legapass, and they have a vault where you can put all your accesses there. And whenever there is an event, a tragic event, they will then go to the notaries and make all the transactions to either send the funds directly in crypto to the heirs or convert in euro. So it's called Legapass.
Any other question? Yes?
Ça fait longtemps que j'ai pas parlé anglais, hein. Alors j'ai un peu perdu mon anglais. Désolée. What do you think about the new law just passed in Europe concerning the interdiction of anonymous account? Unhosted wallet,
Alexandre.
I mean.
So it's not really new.
It's not, sorry?
It's not really new.
New, okay.
So that's something that was kind of already included in the TFR regulation 2 years ago, which I was already against at that time.
I heard about it. Yes, it's true.
So what currently is in the law is that there are some disposition about cash, so not crypto, cash, just normal cash, where you have like specific amounts, thresholds, where you're above those thresholds, where it's forbidden, you cannot pay anymore, which is already a trend that the European law is going to be weaker than the French one, where it's already very, very low threshold in terms of cash. For example, you can't pay anything above 1,000 euros in cash in France. So the laws are already bad in France, to my opinion, because yes, that's basically hurting personal freedom and anonymity. And specifically concerning crypto, there is a disposition that says that crypto asset service provider, they need to identify unhosted wallet or self-hosted wallet with which they're interacting. So it doesn't really change anything from what was already in TFR, in which they were saying that if you interact with a self-hosted wallet, you need to identify the person you're talking to. The problem is that it doesn't really mean anything to identify the wallet owner, because I don't know how to do it. Like from a technical standpoint, you can't really do it. You can ask for a transaction signature, for example, but you don't have the certainty that the person doing it is the real person. Like you don't have a camera looking at who is actually doing anything with the computer. You can't really know for sure. So my personal take on that, which hasn't really changed, once again, it's like the new law is just saying we're going to apply the previous law. So, but still my take on that is that it's going to be so expensive for intermediaries to actually deal with the law, which is interacting with an unhosted wallet or self-hosted wallet, that basically it's going to push most of them to stop handling them. But that's my take. Like I think it's going to go that way, because it's not going to be economical for any exchange platform to identify a customer because they want to take 10 euros from your exchange platform. It's not going to be economical. So I don't see how they put in place so many diligences just to know that someone is actually the right person. So probably, as it was mentioned already in TFR, the objective of it is to prevent crypto from going out of the regulated space. So yes, that's the trend, and I don't like it, but it's not new. So
Oh yeah, exactly. To forbid, maybe.
no, it's like that's where it's very subtle. It's not forbidden.
The objective is
The objective,
objective
it's not to forbid. The objective is to prevent, but they don't want to forbid. So they're gonna make
They
it.
don't have the choice now.
In France, especially, we had that Euro member of parliament, which was Aurore Luc, against which I fought a bit, who actually introduced an amendment that was labeled forbidden, like they wanted to actually forbid.
Yes.
It didn't go, so they couldn't manage to have this amendment voted. So from that point on, 2 years ago, I already said, and I've been saying it regularly since then, that yes, it didn't go, but the result is going to be the same, because they opted for something else, which is that identification, which they can't do. So they just went around so that it's not forbidden, but it's so impractical that most people are not going to
It's
allow you to
for
do
me,
it.
it's almost the same. I mean,
It's almost the same, yes.
It's almost for me.
But-
you
but-
understand?
Yes, it's almost the same.
It becomes
but
more and more
technically,
difficult to do it.
If
so
you buy in cash, for example, or if you find a specific exchange that says, well, it's going to be my niche, then technically it's not forbidden, and you will be able to find someone, but it's going to be very hard. Yes.
yes.
I don't know.
Well, we,
I'm
we
saying
want
it's not
to know
forbidden, that's
where,
all.
but for me, so you just answer to me. So it's
Yeah, but for me, what I'm saying is that it's not new because I've been saying it for 2 years.
yes.
So yeah, and I don't like it. Yes, but I'm not doing the law, unfortunately.
Thank you very much.
What are your opinion about another crypto candidates for an ETF or narrative, and why?
Well, the short answer, based on, I think we're gonna have a collective answer, is none. Because, as we said, well, as I said at least, I'm going to give you the microphone after that. But for specifically, Laetitia said it very well. There is a narrative to have an ETF Bitcoin, because when you hold a Bitcoin through an ETF, you still hold it as a store of value. But for Ethereum, yes, if you hold it through an ETF, then you lose all the advantages of having Ether, which is interacting with DeFi, making transactions, owning stablecoins, getting staking yields. Everything's going away if you own it through an ETF. So that doesn't mean it's not going to exist, but the narrative is way, way weaker. So the Bitcoin ETF was the one with the strongest narrative to actually exist. The other ones are going to be probably just like there exists some ETF on specific tech risk stocks, but they don't have the inflow that Bitcoin ETF have been seeing in the past few months. So I'm not saying there's not going to be any other, but I don't think they're going to have the same success if there are any.
I don't see any traction there for an ETF. I imagine if it launches, some people will buy it, but yeah, I look forward trading against them. Like, it's totally retarded. I don't understand the value here.
And I also remember investing in an ETF is costly. I mean, you have a lot of cost attached to it. So if the underlying asset is not very interesting, then what's the point? But
What kind of costs?
well, you have custody costs, then you have the transaction costs. So yeah, exit costs, absolutely. So no, it's yeah, investing in an ETF is not. You have to pay some money.
Yeah, to answer more directly, for example, like the current crypto ETF in Europe, you will have between 20 basis points to 100 basis points of management fees per year. Like the cheapest Bitcoin ETF in Europe right now is a 21 shares one, and it's 21 bips management fees. And the one that launched currently in the US, it's between 150 basis points for Grayscale, but it's because they shifted from a horrendous fee structure to, I think the cheapest is also 21 shares with 21 bips, and they are all between like 20 and 40 bips. So it doesn't amount to much when I say it like that, but if you buy Bitcoin, it's to hold for the long term. So over the course of 10 years, for example, it's significant. It's significative money.
Yeah. So on my side, I think there will be over ETFs, just because like ETFs are for people speculating on price of the things. So everything that could appreciate in terms of value can be theoretically listed, even though maybe there's no fundamentals or underlying values behind that. Like people are just here to buy things and like make money. So yeah, I don't know if it's like retarded, because like maybe people will make a lot of money out of it. So and it's kind of the goal of the ETF. So yeah, I don't know what.
I didn't mean it's retarded from the asset manager standpoint, but from the buyer standpoint.
Yeah, okay.
How do you think Bitcoin has behaved when compared to risk assets since the introduction of ETFs in the US? And how do you think the correlation, the beta of Bitcoin may evolve when compared to risk assets in the coming months and maybe years?
Okay, I pass this one because I didn't see the chart. Disclaimer, it's very risky to actually make an analysis of correlation between Bitcoin and the rest because it has basically changed every year in the past 5 years. So 1 year it's correlated to NASDAQ, then the other one is correlated to gold, and then so you're forced to go back to your own convictions, like how is it going to behave in the future. So I was saying earlier, so maybe you were not there, but I was saying when the ETF were validated, basically what we were saying in the asset management world is that most of them are starting to actually have a real investment thesis on Bitcoin. And when you look at their fund allocation right now, like the classical 60% equity, 40% bonds, and usually you do that because you want 60% risk on and 40% risk off. And when you're looking at the asset managers that are introducing Bitcoin in that scheme, they are not taking it away from the 60%. They're taking it away from the 40%, which means that they think it's something diversifying and closer to risk off, like store of value. So my personal bet, but it's a bet, is that it's going to get closer to something like gold and go away from being perceived as something risky and tech. Even though I'm talking about long trend here. Like I'm not talking about this year or next year. I'm talking about 5, 10, 15 years. It's probably gonna have a long-term correlation with something seen as a store of value. But it's a bet. It's my take on that.
If I can give a different answer, for me, risk asset and Bitcoin have been correlated because all pumped by just more liquidity being injected into the system. And so, we look, as Alexandre mentioned, we look like kind of closely at that and you say, oh, it's correlated. Oh, it's not. It's correlated again. Oh, it's not. And it's just like every assets, basically, except for bonds, are correlated right now. Real estate, tech stocks, and stuff like that. Just because you have to buy something if you want to store purchasing power into the future. And it's a lot to all of us. And so everyone is buying like NVIDIA or Microsoft like meme stocks or crypto right now. And so it's only a feature of our current monetary regime that all of those stuff are correlated. And when Bitcoin enters like its parabolic phase or enters a bear market, which is mainly the consequences of the exuberance of the bull market, it decorrelates because it kind of follows its own impulse, but it's only for a moment, and then it gets back to the same kind of loosely correlated to risk asset, because at the end of the day, it's a function of liquidity within the global monetary system. The interesting thing, though, being that it works way better than the rest at this specific use case, because there is no company, there is no share dilution, there is no dividends that you can miss, there is no targets, there is no, loosely, there is not really much implication from new regulations and stuff like that. So I think it will stay correlated on the long run, but it doesn't mean that we should look at Bitcoin like a risk asset. It just means that everything is pumping because of an underlying forces.
And also, Bitcoin goes up and down, up and down. The price, I wouldn't say that it's not interesting, but it's a new asset. It's only 15 years old. So, and we don't know yet the full potential of it. So what I think is to go back to the fundamentals. It's a peer-to-peer electronic cash system. And so the value is the network and all the application you can build on it. And we don't know yet what the applications will be.
Though. ETFs mean it's not just that now. It's a product played by big finance in Wall Street.
Yes, but the fundamental behind it remains. And so the value that you see on the ETFs is the potential value of the network, because it's the store value, but still the value comes from the network and the application that you will have on it. So it's just a reflection of that value, but the real value is the fundamental of Bitcoin. And it's important for me not to forget it.
All right. Thank you so much for your talks today. I'm very happy of all the questions of the audience as well. I'd like to extend our thanks to ESCP Business School, who is hosting us today, and of course Web3 Talent Fair and the Curious Society, who are co-organizer of this event. So thank you very much for your attention, and I hope this has answered some of your questions, gave you some feedback about the market, about this amazing speaker, and see you next time.